Time now for today's Market Movers with easy-to-follow futures and options trades from CMEGroup.
Welcome to Market Movers. I'm Jim Urio, and today we're talking about Friday's release of the labor data. We're looking at using E-mini S&Ps as a means of hedging risk or creating additional exposure to this event, which is consistently one of the biggest market movers of the month. Joining me is Chief Investment Officer of Kingsview Asset Management, Scott Martin.
Hi, Jim.
Okay, the last four NFPs. We've had 2 beats and 2 fails. Now, the fails were bigger than the beats. What do you expect? Not necessarily what the number will be, but what does the market want for the number and how will it react?
Fails bigger than the beats. You're making me think of my music career. What's interesting is, and which is a failed thing in itself, I tell you what's interesting. These numbers, to me, are becoming more and more important these days, Jim, because of the failures in D.C. and the fact that a lot of other economic data, things like GDP, are coming in flat. So therefore, I think the number needs to be pretty big.
I think it's interesting. And if it's a bad number, do you think we're going to take out the tightenings for the year? The market is going to?
It seems like the Fed is becoming very data dependent here, which, as we've talked about, is a good thing. I think that's what the Fed needs to be doing. So, yes, I think there's a good possibility that, let's say we get a run of payroll, say, in the 100K range, 150K. It probably takes off the rate hike for the end of the year.
Because I've been in the 1 hike this year camp, but if that number's a 58 like it was a couple months ago, I take that away. So before we dive into our trade discussions, I'd like to point out that as with all market movers, it's important to view these trades as examples that allow you to see different ways to use futures and options products, manage risk, or create additional opportunities, not as trade recommendations or advice. Prices and movements will vary. When we looked at these trades right now, the market, the SEP contract and the ES was trading about 24.71. Scott.
So these are difficult markets right now, Jim, which means they're fun to trade, but they're also challenging. So there's probably good risk and reward in there. Amen. So I'm looking at a good risk and reward trade here, and specifically the week 2, which expires Wednesday next week. So that gives you a few days, as we like, to wait till the digestion, let's say, goes through on the non-farm payroll. So looking at the week 2 Wednesday, 24.50, 24.60 put spread in the ES. This will cost you only 1.5 ticks. It expires August 9th, as I mentioned, to make a potential 425. Just to get an easy hedge on, I believe, to what could be a market that, let's say, could take the payroll number poorly.
What I like about this is with VIX trading the way it is and volatility so incredibly compressed, you get good risk-reward profiles. And I like that, too. I've been a bull. You know I've been a bull. And I think if you look at the 6-month chart, it's trending higher as it has been for a long time. So I'm looking at buying the week to August, the same date as yours, the 9th. The 24.80, 24.90 call spread for 2.5 ticks. Now, obviously, we pay more, but it's closer to the strike. This trade expires August 9th, has the SEP contract underneath. It risks 125 to make a potential 375.
They both offer nice risk and reward. Now, what you need for a couple of these, or let's say for it to move closer to those top lines of those, or the bottom lines of those fill outs, is you need some volatility. And the market is kind of sitting here. We need, I think, a bigger or a small number to kind of move the market around a little bit, because you talked about how VIX has been down for days in a row.
Okay, we saw the ADP and it was mixed. The revision was good. The headline number was kind of soft. What does your gut really tell you about this number?
My gut tells me it's going to be a nasty number, just because of the GDP falling short and the fact that we're probably due for another stinky number. So I'm going to say sub 150,000.
It's funny to me how our guts lead us the exact way. I was going to say, to me, I believe deep down it's going to be
Isn't that what makes a market, though?
Absolutely. Thanks for joining us on Market Movers. I'm Jim Urio, where we're hoping to make you a better trader.